Welcome to the Roy Morgan Weekly Update. The last week's been dominated by heavy rains in much of the country, and in particular Victoria, New South Wales and Tasmania, with many towns in regional areas still dealing with significant flooding. The immediate impact is clearly on the people whose homes and farms and businesses have been flooded. But looking forward, many crops have been wiped out, and this will cause further inflationary pressures on grocery prices in the months ahead. On the economic front, we're approaching Treasurer Jim Chalmers' first federal budget next week, and the Treasurer has spent the last week preparing us for bad news in the budget. Chalmers has been quick to point out the economic troubles facing the US, the UK, Europe and China, and the potential impacts these troubles will have on the Australian economy. So although Australia is expected to avoid a recession, slowdowns in these key overseas markets will have an impact in Australia, and this has been reflected in declines on the stock market, the drop in the Australian dollar, which has now hit its lowest point since April 2020 at just 62 US cents last week. But despite these concerns or this news, support for the Labor government remains strong, unchanged on 55% to the Coalition's 45% on a two-party preferred basis. Other measures of confidence are down though. Government confidence is down 3.5 points to 105.5, and consumer confidence is down for a third straight week to 82.2, so it's now at its lowest for over 2 months. The negative sentiment from markets and from Treasurer Chalmers is clearly impacting how consumers feel. There was a fall in the average petrol price by around 5 cents per litre last week. Now, this runs counter to predictions of surging prices. And if this fall continues, we might expect it to support consumer confidence improving over the next week. Now, as you know, every week Roy Morgan asks Australians what they expect annual inflation will be across the next 2 years. And this week, the measure increased sharply. It was up 0.5 percentage points to 6%. So Australians are expecting 6% inflation over the next couple of years. This is the highest since mid-July, when interest rates went up and petrol prices peaked at over $2.10 per litre. If we look at a longer term trend on inflation expectations, it shows the index has increased significantly since a record monthly low of 3.2%, and we reached that in June and August 2020 during the early stages of the pandemic. During 2022, the monthly index, what Australians expect inflation to be, has oscillated between 5% and 6%. 2 months up, 2 months down, since the beginning of the year, or since the figures began at the beginning of the year at 4.9% in January. Now, inflation, like many things, doesn't hit every member of the community equally, and this is really clear when looking at inflation expectations by employment status. Now, the average inflation expectations of Australians across September were at 5.4%, up 2.2 points from 2 years ago. Remember, the previous figures were weekly. However, there is a big difference between the inflation expectations of employed people. They expect 5.2%, that's the lowest of any category, and those of unemployed people. They expect 6.4% inflation, the highest of any category. It's also worth noting that the largest increase to inflation expectations has been for unemployed people. So not only do they expect the highest level of inflation, it's the one that's gone up the most, up 2.6 percentage points from 2 years ago. Now, we also have the results of the latest Roy Morgan poll on Victorian voting intentions in the month of September. You'll remember the Victorian state election is set to happen in just over a month, towards the end of November. So the September results continue to show the ALP government of Premier Daniel Andrews on track to secure an easy re-election victory. The ALP is now on 60% on a two-party preferred basis, up 2 percentage points since August, and well ahead of the LNP coalition on only 40%, down 2 percentage points. That's actually more like a landslide. The results of this Roy Morgan poll have been consistent over several months, consistently showing the ALP well ahead in Victoria and set for a landslide win. And now for something really different, a look at the installation of solar energy in Australia. There have been a range of incentives trying to get people to install solar energy systems in Australia in recent years as we push to increase the availability of renewable energy in the whole Australian system. Now, nearly a third of Australian households, 32.3% to be exact, or 3.2 million households have a solar energy system installed for rooftop solar, for heating a pool, or perhaps a hot water system. So that's up from only 14%, or only 1.3 million households in 2018, only 4 years ago. That's extraordinary. Clearly some states are doing better than others when it comes to installing solar energy, although there are clearly good reasons to explain why. Nearly half the households in South Australia, 44.5%, and nearly half in Western Australia, 43%, now have solar energy, while only around a quarter of households in New South Wales and ACT and Victoria have solar energy. The reasons behind this difference are obviously related to weather, but not only related to weather. And clearly weather's more favourable to solar energy in sun-drenched places like Perth and Adelaide. There's also the matter of high-density living in Sydney and Melbourne, like apartments, flats, units, townhouses and terraces that prevent many households from installing solar energy. Even so, this data shows that there remains an opportunity for millions more households to take up solar energy systems than currently are doing so. Finally this week, some key research Roy Morgan's undertaken in collaboration with the Australian Retailers Association, the ARA, on what to expect in the pre-Christmas sales period that runs from mid-November right through until Christmas, a really important time. So overall, Roy Morgan forecasts pre-Christmas retail sales to increase by 3% to a record high $63.9 billion on a seasonally adjusted basis. Now, given the pressures of increasing interest rates, the highest inflation figures in decades, this is an impressive result, even if the increase is slightly below inflation. There's been much media speculation that these rising interest rates would lead to a real slowdown in the economy this year. But this forecast for Christmas shows that it isn't expected to happen. A highlight is the large growth expected in hospitality spending in cafes and restaurants after 2 years of COVID-related restrictions. Spending in hospitality venues is forecast to increase 16.3% to over $9 billion in the run-up to Christmas. On a state-based level, the largest increases are expected to be in South Australia, plus 6.6%, Queensland, plus 4.6%, and Tasmania at plus 3.8%. A look at retail spending trends in the last few years really shows the big impacts COVID restrictions and COVID lockdowns have had. In 2020 and 2021, the monthly spending data jumped up and down depending on the level of restrictions. You can see that in the chart, the numbers going up and down, the ones in the middle. It's only during 2022 that we saw monthly spending patterns returning to normal, although at a much higher level than in 2019. Since Victoria and New South Wales emerged from lockdowns in the last few months of 2021, Australians have been spending over $1 billion per day on retail for the first time. One thing to note in this chart is the large boost to spending in October, November and December 2021, as Australians in Sydney and Melbourne emerged from extended lockdowns. So after another really eventful week, that's a wrap. Subscribe now for free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thank you for listening, and I look forward to joining you again next week when we'll have the latest data on consumer confidence, inflation expectations and voting intentions. Take care and see you next week.